Hello everyone, welcome to the channel. I'm the Millennial Investor and welcome back to another episode. And today we're going to be going over a couple of different topics, and the main thing that I wanted to go over was how M1 Finance works, how you could get started with investing. I get so many comments all the time focused towards people asking me how M1 Finance works, if they should switch to M1 Finance, and if they do want to switch, do they have a referral link that they can use. Now first off, in the description of all of my videos, just like every one of my videos so far, I've referred 14 people to the platform. So if you're looking at getting started in investing, I'm going to give you all the reasons why you should get started with M1 Finance instead of choosing Robinhood, instead of choosing Fidelity, instead of choosing Betterment, instead of choosing any other brokerage that's out there, because M1 Finance is really the best and it's especially easy to use for beginners once you learn how to use it. So that link right there is in the description of all of my videos. So you can get $10 just for getting signed up once you make a deposit of $100 or more, so you can get started. So anyways, let's go ahead and jump right into the video, and I'm going to show you how M1 Finance works. And right here, when I click this button, you see this button here that says Auto Invest. When you click this, when I click it, it immediately makes a buy order for 14 different stocks. I didn't have to go in and immediately click that. Here, I'll do it again. Look, when I turn it off, it goes away. All my buy orders are gone. And then when I click Auto Invest, turn it on because I have over $25 in cash. Immediately 14 buy orders are set, and it's based off of the holdings in my portfolio that are the most underweight. So all 14 of these companies are going to be purchased in just a couple of minutes because the market's about to open and get started. So basically, I want to show you how that works through M1 Finance. So if you're already using M1 and you're already involved in investing, this is probably not going to be too helpful for you, but I will be giving some updates at the end of the video about my portfolio if you're still interested in that. And then I'll also be updating you guys on my dividend income. I want to show you these charts, how I'm doing. Those of you that did watch my previous video, I did just add store capital, which is right here, and I also just added WPC, which is WP carry. So I want to be updating you guys on my new numbers. These are old, and I want to be updating you guys on that. But to get started, before I jump into M1 Finance and start discussing the features and why you should use it and get started with its brokerage, I wanted to announce this. I was going to wait at the beginning, but I went ahead and decided that I just want to go ahead and just get it started now and get it out there in the open. I had someone recently message me about this, so I just went ahead and decided I would go ahead and launch the service. It'll be in the description of all of my videos. But you see this paragraph here? Are you new to the stock market? Would you like some help getting started with your new portfolio? You now have the chance to speak to me live through a cell phone session. For $20, you can schedule a half-hour mentoring session in which I directly help you with your investments. This gives you the opportunity to ask me dozens of questions you wouldn't have had the opportunity in a regular video. A larger return in a portfolio makes an incredibly massive difference for the long term. To schedule a phone call, share a portfolio, or ask me general questions, you can email me below. So basically what I was wanting to offer is that I have a lot of people that are constantly asking me questions about stocks, about investing, about dividend investing. How do I get started? So basically, if you don't want to have to try to go back and forth and hope that I answer a YouTube comment, what you can do is you can email me directly. If you just want to ask me one or two general questions, I would love to answer them if you do want to go ahead and send me a question to that email. But if you would like to schedule a mentoring session where it's half an hour, where I will break down each individual stock in your portfolio, where I can help you just with general investing, just things to look out for, and a lot of the mistakes that I made starting out. Over my 2 years worth of experience in investing, I can say that I have learned a lot, so I can help a lot of new beginner investors avoid those beginner mistakes, because there's a lot of mistakes that a lot of new investors don't really see because they're new and they don't really know what to look for. So if that's you, if you're looking at getting it started, that $20 that you'd be spending at the beginning, you're going to make that 10 times over in the long run from all the gains in your portfolio that you could potentially save yourself from making and the mistakes that you could save yourself from making. So if you're interested in that, go ahead and schedule a phone call right there. But anyways, let's go ahead and get straight into the video. Let's go ahead and get started with M1 Finance. So let's get started with the basics. How does M1 Finance trade? So this is on M1 Finance's help section. So when you deposit $100 into the account, if you have, they'll give this example here with 5 holdings. So if you have 100 holdings in a portfolio, it will divide that evenly based on the target that you put. So with me, you can see here, Broadcom is 8% of my portfolio. So 8% of all my money goes straight to Broadcom, and then 7% of Realty Income, and then 6% goes to Visa, and then it goes down and down and down, and these are my holdings here if you want to see my whole portfolio. But basically, that's the target percentage that I put based off of how much I believe in these companies and their success. Once that first deposit gets made and it gets divided into those companies, stock prices move every day. So as you can see here, let's just go ahead and pick Broadcom, my number one investment. So right now on the day, it's down 17 cents or about 0.05. But not all of my stocks are doing those price movements. Some of them might be up, some of them might be down. So like Realty Income, for example, it's up on the day. It's up 0.24%. So that means that Realty Income is now going to be worth more than Broadcom in terms of dollars. So what it would do, how M1 Finance trades, when it goes down in value. So you can see here the overweight holdings. It's given this example with 5 holdings. So let's say this holding, for example, this purple slice is Realty Income. It went up in value, so it's now worth more. And let's say that this slice right here, when it goes down, this is Broadcom. So when I deposit, it's going to bring that even to Realty Income. So you can see the dollar amounts, and I'll just watch it one more time so you can see 10,000, 2,500 deposit, and it deposits to where they're evenly weighted. So basically what this 14 buy is doing, so I'll just look one here. So Visa. So it's 6% target percentage, but it only has 5.9% of my portfolio based off this dollar amount. So what it's going to do is do a small deposit to where it brings this dollar amount up more to where I own more of the company to where it makes up about 6% of my portfolio. So you'll notice that Visa is going to be on here. So yeah, Visa is in the list. So that's going to be bringing up the target percentage. And it's going to do that with the other 13 stocks in my buy order. Now the reason why this is so important and why this is so critical, and this one feature is the main reason why I decided I wanted to go ahead and go with M1 Finance over any other brokerage. This one feature is because this is why it's so powerful. Because I want to show you some examples here. We're going to sort my portfolio by best return to worst return. So with Discover Financial Services, I haven't made a deposit and had a buy order for that company in several weeks, probably a month and a half now, because it has performed so well. I'm up 85%. At one point, I was actually up in the triple digits on this company. So when I bought this company, I bought it for $29.81 a share. But today, it's 55 bucks a share. So a massive difference from where I bought it at. Now, I still believe in the company. I think they're going to be successful long term, but that dividend yield is not as high as it would be as if it was at a lower price. And also, I'm not buying it at as good of a price as I would have been 2 or 3 months ago when I was first buying this stock. So you can see how it's had a massive move up here. If we pull the 3-month chart up here, it's had massive moves up. So it has not been buying that stock. But one stock here, I'll pull up one that hasn't done very well. Let's pull up say MO stock, Altria. Altria is one that's been lagging over the last 3 months, 2.5%. You can see the year chart here. It's pretty much just stayed flat ever since this recession's hit us. So I've been buying that one very frequently. So as you can see here, if we sort from my biggest gainers to my biggest losers, a lot of these stocks that are at the top, like Apple, Whirlpool, Discover, Realty Income, Home Depot, a lot of these aren't being bought. You can see right now, Discover is 3.3 versus its 3% target percentage. Realty Income is 7.2, and it's only supposed to be 7. So those will not be deposited to. My number one holding, Broadcom, it's a little bit overweight. But if we sort by my worst performers, so I'm down on Starbucks, that one's under my target percentage. WP Carey is under, Store Capital under, and you can see the pattern here. So basically, these are the main stocks it's going to be focusing on, the ones that have went down in price recently. So why this is so successful is that in the long run, it will A, keep your portfolio very balanced so that way one holding doesn't get completely out of control. If Broadcom doubled in price next year, it's not going to be extremely overweight in my portfolio to where it's like where I own just 1 or 2 companies, so that way it keeps it in an even balance. And the other gain to this, the other benefit to this, is that if you're a dividend investor like me, the lower you buy these stocks in price, the better the dividend yield. So those of you know me, I focus on dividends. We go here to my activity and we sort by dividend only. I focus on dividends. As you can see, I receive dividends all the time. So with me, I want as many dividends as possible. So buying stocks that have underperformed recently, make sure that I get the highest dividend yield possible and I get the best dividends and for annual income. And that's what this whole chart is about. This is my annual dividend income, my monthly dividend income, and my portfolio value. So this is how I track it, and that's why I love M1 Finance. So a little bit about editing, how it works. When you get a holding in your portfolio and you decide that you want to sell it. So let's say that I were to sell, okay, let's take Broadcom. Let's say that I said, okay, I don't like the company, I don't like where they're going, I want to sell it. If I sell it, I take the 8%, here, we'll just go ahead and fill it out. So let's go ahead and hit remove. So now you can see the total right here. I'm going to highlight it at the bottom of the screen. That is 8% short. The total is 92, but we have to have it up to 100. So what I would do is I would go with some holdings. I would pick the ones I like. I'm just going to fix some positions. So let's just say I wanted to increase these, wanted to increase a couple of positions, and then I decided, okay, these are the companies I want to change. and that will make my new holdings to where it will be at these target percentages, and the money that is sold from Broadcom will be deposited into these companies, and then it would save, and these would be my new holdings for that position. So I'll go ahead and exit. If you wanted to save it, you would click save. I don't want to save it, obviously. And one thing that's really interesting is that you can make subcategories. So if you wanted to have holdings, so let's say here, Broadcom is a tech company. Let's say I wanted to have a portfolio that's just of tech companies, and I still wanted to keep in my portfolio. What you can do is you can hit research, you can click my pies, and these are just some sample pies I made for you guys. So like telecom, for example. So telecom, I put two companies, I put AT&T and Verizon. So let's go ahead and go to tech. Let's just make some tech companies. So tech companies, these are some of the ones I own right now. You can see Broadcom, Visa, Microsoft, Qualcomm, Apple, and IBM. So what you could do is just make this one tech sector and just put in your portfolio. So if you wanted to put this subsector, you could add that, get rid of Broadcom, and just put a subsector so it would deposit just into all of your tech companies, into multiple companies at once, and still have these other holdings. And one more feature that I wanted to mention here is the rebalance feature. After that, I'll start getting to the nitty gritty of M1 Finance and some of the features that it offers, but the main thing here is rebalancing. So with rebalancing, if one of your holdings got completely out of control, like the example I gave was Broadcom doubled in share price, so my target percentage for Broadcom is 8%. Let's say it got all the way up to 15%, so way higher than it should be. Let's say it sticks out. You see how some of these stick out a little further than others? Broadcom, let's say it started sticking out all the way to here. It was way past what it was supposed to be. So what I could do, you see this rebalance tab? If I were to click that button and confirm it, then what I would do is sell all of my positions are overweight. So like these two are overweight. It would sell 0.1 and 0.2% of these holdings, and it would deposit it into all of the others. So see how it says 8% target, 7% target, 5% target. It would make those exactly down to the dollar, exactly that percentage. So that's what a rebalance can do for you. And the same thing, like I said, with dividends, anytime that you have a cash balance of over $25, it will automatically deposit into all of these different stocks and buy all of these different companies. And you can do individual buy orders as small as $1. And speaking of $1 and automatic cash balancing, if you see here, we're going to go to my holdings tab. You see here on invest, and then we click holdings, and we're going to sort by, let's go ahead and hit by shares from largest shares. You can see here 3.06101, 2.99697. You see here how there's decimal points. I don't have to buy whole shares. Now, it has very much been a trend for a lot of brokerage to offer fractional shares, and M1 Finance was the one to pioneer this. So if you want to buy Store Capital, the one example that I gave is that Store Capital has, I believe, 1,200 properties. They're a real estate company. So what you could do, if you had $1 bill, all you need is $1, you can buy Store Capital and own a tiny little piece of 1,200 different real estate properties all over the United States. It's a real estate investment trust. So with $1, you could get diversified for 1,200 different properties. Realty Income is actually another real estate investment trust. They own like 6,500 properties. So you could take $1 and own 6,500 properties. Or you could take $1 and own a share of Visa. You could own a multi-billion-dollar corporation for a mere $1. This could give you access to their profits, to their dividends. You are a legitimate owner of the business. You own a piece of their business. So when I look at these companies and I buy them, you are a legitimate shareholder. You are entitled to their dividends. You are entitled to vote for the CEO, for the board of the directors. You are having ownership in these companies. And with these dividends, it also, what you do is you multiply your number of shares that you own and you take that by dividends. So even if you own only $1, you are still entitled to dividends as well, not only share price gains. So getting started with investing today is as easy as it's ever been. You don't have to call up a broker. You don't need professional advice. All you need to do is get started. You can get started with a referral link like mine, and you can get started with $10 for free just for getting started, and you don't need any type of extreme knowledge. And speaking of knowledge about investing, so a lot of people probably watching this investing is saying, okay, well, Jordan, I don't really know what I'm doing. I don't really want to pay for that $20 mentoring call that you're interested in. I really just want to get started on my own, but I don't really know how to do that. So what do I do? So when you get started with M1 Finance, what we're going to do is click the Research tab here. We're going to click Expert Pies. If you don't want my advice, if you don't want anyone else's advice off of YouTube, if you don't want to hire an advisor, if you want to just get started with $100 and just see how it starts, how it works, what you can do is click Expert Pies, and you can get started with investing. So they have different categories here. They have general investing, they have plan for retirement, responsible investing, income earners, hedge fund followers, just stocks and bonds, and other strategies. So let's just go ahead and get started with general investing. This will give you an idea of what it looks like. So let's just go ahead and click moderate, the one in the beginning here. So what this will do is diversify your portfolio into thousands of different holdings. You can see we have bonds. So what this does, when you buy this, you buy, what is it, 18,000 different holdings. So you'll already be diversified between 18,000 holdings in that. We click VEA here, another Vanguard ETF, 3,900 holdings. Basically what the point I'm trying to say is all over the world with bonds, with stocks, international stocks, domestics, energy companies, tech companies, telecommunications, healthcare, utilities, consumer, whatever you could imagine, this will diversify you into pretty much any and everything you could possibly imagine. And basically what this does is guarantee slow returns. It's not going to be massive. You're not going to double your money up in 1 year, but it's going to steadily go up. Like this chart right here, it's just going to be a steady gradual line up. And they also have, speaking of steady gradual lineups, if you're worried about losing your money, ultra conservative is the way to go. And even though your returns will be very small, it will almost never lose money in the long term. It will always go up, and any downturns in the market are going to be very small. So, and you can see others here. So like very basic, so like just stocks and bonds. These are really easy to understand. So let's just go ahead and hit M1's 50-50. Really simple to understand. 50% bonds, 50% stocks. It's really just that simple. You can see here it goes in a pretty much long-term straight line up. And you see here, like one thing that I do, income earners. So I focus on dividends. These are going to be a lot of pies that are focused primarily on dividends. Let's just go ahead and click domestic dividend here. So what this will do, when you own this portfolio, in the long run, over 5 years, if you would have invested 5 years ago, you would get 49.09%. Well, you will also get about 1.981% dividend yield. So this is what you will get paid in dollar amounts annually just for owning the stock. And these are some of the holdings that are owned. You can see VIG here. It's diversified between 229 different holdings, and it gives you a lot of the main primary dividend growth stocks that you would normally get in an ETF. But anyways, the point is, all this becomes so simple when M1 Finance makes this optional for you. And the great part about all of this is that regardless of which type you choose, if you want to pick individual stocks on your own, if you want help from me, if you want to get resources from other, if you want to click any one of these tabs from Expert Pies, it doesn't matter what your strategy is. If you want to own stocks, bonds, whatever, there's so many different ideas out there. But the greatest part about all this is, what does this cost? What is my cost of using this service? What are my fees that are associated with it? And let me tell you, it is absolutely zero. The only thing that is charged by M1 Finance, you have the option, you are not obligated, but you have the option to get M1 Plus. There's options that come with it, like for example, you can get a debit card with extra cash back, but that is not required. You don't have to do that one bit. They also have offers like investing off of leverage, those of you that even know what that is. And then they also have other features that can come along with it. But all the main features that I just discussed as far as buying stocks, selling stocks, how the stocks trade, information about the expert pies, all that is 110% free. It costs you $0 to get started, $0 to buy a stock, $0 to sell a stock, and $0 to use any of my information off of a YouTube video, because you can watch my videos 3 times a week when I post here Monday, Wednesday, Friday at noon, and you can get all the information about dividend investing, and I can help you get started. So thank you guys that watch all the way to the end. I'm going to give you a quick update on my portfolio. So you can see here that I am up very well on a lot of my positions like I showed you earlier. Still doing very good. I'm up on 30 of my 31 positions now. Since we added WP Carry and Store Capital, we now have 31 positions. Up $384 in total, 21.26% return in total, $364 in market gain, $17 in total earned dividends. I'll scroll through my total holdings right here if you want to pause and you want to see some of my gains on the positions. And there we go, all the way to the end. I did just lower my target positions on AT&T and IBM. But overall, the portfolio is doing very good. I have those 14 buys set right there. I did receive some more dividends recently. As you can see, I did receive dividends from Realty Income, McDonald's, and Whirlpool Corporation. And I did just deposit $25, and that's where that 14 buy positions are about to come from. But overall, let's go ahead and go to my dividend income, and I will update you guys on this, and then I'll end the video. But before we update you guys on that, like I said, this is in the link in the description. So if you're interested in getting started, go ahead and use that $10 link right there. But to show you guys an update on my portfolio, here you go. I'm going to update it in 3, 2, 1. And there you go. There's the updates on my portfolio. You can see my annual dividend income is still going up like always. My monthly dividend income, this is by far where a lot of my companies stack up for this month in June. For me, it's March, June, September, and then December, I believe, is the main months where I get a lot of my income. That for just out of coincidence, that's when a lot of them have their dividends being paid out. And my portfolio value, this is my portfolio value as of yesterday's close. So overall, guys, doing very good. And thank you guys so much for watching all the way to the end. If you have any questions for me, like I said, email down in the description or you can leave it down in a YouTube comment. Thank you guys so much for watching all the way to the end, and I'll see you guys next time.